Here is the U.S. market summary for the week of August 25th, 2025. The central theme this week was a pivotal shift in the market's primary focus. Investor concern has moved decisively away from the risk of persistent inflation and toward the rising risk of a slowdown in the labor market. This change in narrative was driven by a notable dovish turn from the Federal Reserve, which caused the market-implied probability of a September interest rate cut to surge to over 80%. Looking at the weekly performance, the market experienced significant volatility but ultimately finished strong. Dow Jones and S&P 500 both closed with gains, with the Dow reaching a new all-time high. This strength was primarily driven by a powerful rally on Friday, following comments from the Federal Reserve. In contrast, Nasdaq underperformed, signaling a continued rotation from high-growth stocks into more value-oriented sectors. Reflecting the rising expectations for a rate cut, the 10-year Treasury yield fell, easing some pressure on equity valuations. The week began with a broad sell-off on Monday, driven by lingering inflation concerns and anxiety ahead of the Federal Reserve's symposium. However, Tuesday saw a dramatic intraday reversal. The market opened sharply lower but staged a powerful recovery after the release of the July FOMC minutes. These minutes revealed that two influential Fed governors had already voted for a rate cut, which shattered the market's perception of a unanimously hawkish Federal Reserve and provided a significant boost to investor sentiment. The main event of the week was Federal Reserve Chair Jerome Powell's speech at the Jackson Hole Economic Symposium. His address was a masterclass in shifting the market's narrative. This graphic illustrates the pivot. Before the speech, the Fed's primary concern was weighted toward inflation. After the speech, the scales tipped decisively, with employment risks becoming the dominant focus. This dovish shift was the catalyst for Friday's rally and caused the market-implied probability of a September rate cut to jump from 45% to 83%. To deconstruct this policy pivot further, this graphic compares the Fed's stance before and after the speech. Before Jackson Hole, the primary concern was inflation, which was viewed as persistent, leading to a hawkish, wait-and-see policy tone. After the speech, the focus shifted to employment risks. Inflation driven by tariffs was reframed as a one-time price level shift, and the policy tone became distinctly dovish, with the Fed signaling it is prepared to proceed carefully to support the labor market. Turning to corporate earnings, this week's reports from major retailers painted a mixed picture of the American consumer. Walmart reported strong sales growth, indicating it is gaining market share, but its profits were squeezed by rising costs. Target, on the other hand, struggled with declining sales and margin pressure from tariffs. In the home improvement sector, both Home Depot and Lowe's noted that while demand for small essential projects remains solid, spending on large discretionary renovations is weak. These retail earnings provide a real-world view of the competing forces shaping inflation, as illustrated in this graphic. On one side, we have inflationary pressures from the supply side, such as tariffs and rising costs. On the other side, we see powerful disinflationary pressures from the demand side, as consumers are actively shifting to value-oriented stores, cutting back on non-essential goods, and downsizing their home projects. The key takeaway is that this weakness in consumer demand appears to be the more powerful force, which validates the Federal Reserve's recent pivot. In a special report, Rocket Lab successfully completed its 70th Electron mission this past Saturday. This launch, the company's 12th of the year, demonstrates an accelerating operational cadence and solidifies its position as a reliable leader in the small satellite launch market. This consistent execution supports a positive long-term outlook from analysts who maintain a consensus price target of over $50 for the stock. The company is also preparing for the debut of its larger, reusable Neutron rocket. Looking ahead to next week, the market's new dovish optimism will be tested by several critical economic data releases. The most important reports to watch are the second estimate of second quarter GDP on Thursday and Friday's data on personal income and spending. However, the most critical release of all will be Friday's Core PCE, which is the Federal Reserve's preferred measure of inflation. The outcome of the Core PCE report will likely determine the market's direction. We have entered a bad news is good news environment, where signs of economic weakness are viewed positively because they increase the certainty of a Fed rate cut. In the bullish scenario, an inflation reading at or below expectations would validate the Fed's dovish pivot and likely fuel a market rally. In the bearish scenario, however, an unexpectedly high inflation number would challenge the Fed's narrative, create significant uncertainty, and could trigger a market sell-off. Next week will also bring another round of important earnings reports from the retail sector, providing a more detailed look at consumer health. The chart shows the consensus revenue growth forecasts, which highlight a significant divergence in expectations across the industry. We will be watching Kohl's for insight into the middle-income consumer, Abercrombie for trends in discretionary spending, and Dollar General as a key barometer for the low-income consumer. The technology sector will also be in focus, with key earnings reports serving as a crucial check on the health of the artificial intelligence narrative and broader corporate spending. The most important report of the week will come from NVDA. Its guidance on future demand for AI chips will be more critical than its quarterly results and has the potential to influence the entire market. We will also be watching reports from Snowflake and CrowdStrike for insights into enterprise data and cybersecurity spending. In summary, there are 5 key takeaways from this week. First, the market is navigating a delicate balance between a supportive Federal Reserve and the weakening economic data that makes that support necessary. Second, the Fed has clearly pivoted its focus from inflation to employment. Third, the American consumer is showing signs of strain. Fourth, the market is in a bad news is good news regime. And finally, the upcoming Core PCE inflation report is the single most important catalyst for the week ahead. Thank you for joining our weekly market briefing. We will continue to monitor these developments and provide you with timely analysis.